Now talk us through some of the market activity today. We are seeing the bourse falling back after 2 consecutive days of increases, really still trying to test that 3,400 level mark.
Well, I think what is happening is actually more of a paradox, because the market has basically been trading sideways since the beginning of the year, and also for the greater part of the last quarter of last year. And this especially in light of the very encouraging results that we've seen by most listed companies. Of course, some of them have not performed very well, but majority, I think, have performed better than had been expected, especially bearing in mind the difficult trading environment last year. So I think probably it hints that there are other factors that are probably holding back the market, so to speak. And we think these are basically factors on the macro side of the economy.
Now looking at CFC Insurance out with results, pre-tax profit more than doubled to just over 1 billion shillings. That insurer really proved to be quite resilient despite factors such as the high inflation environment, as well as interest rates and a very sluggish share performance.
Well, I think CFC's results were quite impressive, again, given the environment last year, and also more so for insurers, especially those who had invested heavily in equities. They got quite a hit in terms of capital losses, which we did not see in CFC's case. And I think the 20% growth in net premiums, also supported by falling or rather a decline in claims, basically helped them to boost their bottom line position. So I think that was a very good performance, and I think looking at the way their business is structured, we should expect perhaps not a tripling in growth moving forward, but more or less continued sustained earnings growth.
Now, a company that didn't do pretty well was Total Kenya, posting a 96% drop in full-year profits. What are your prospects for that company going forward? We saw the stock falling back for 2 consecutive days.
Total's position appears to be quite tricky, especially when you look at the factors that were working against them. They had a significant increase in operating expenses, which is expected given the high inflation environment prevailing last year. They also had a very significant jump in finance costs, which of course is related to increased borrowing to fund their working capital requirements against an environment of very high lending rates. So again, looking at their top line, they grew their top line very well, 44% growth in turnover, net turnover actually, given the environment was quite impressive. But I think it's probably an issue of having to look at their cost side and possibly doing some shedding here and there to enable them return back to profitability. Because I think in terms of market share, they have significant market share, as is evidenced by the growth in turnover. But I think their challenge is really on the cost side.
Now looking at NIC Bank, it has entered into a partnership deal with Postbank to roll out agency banking instead of setting up their own branches, which they deem is going to be quite expensive. What impact do you see this partnership having on NIC's revenues going forward?
Well, that remains to be seen, because unlike the bigger counterparts, the equities, the KCBs, Cooperative Bank and National Bank, who have a very sound footprint across the country in terms of number of branches, there's also the challenge that the big banks have actually made a lot of inroads in terms of getting to the retail market, and are quite well known at the ground level. NIC's challenge, I think, is for a very long time they've actually been perceived to be an analytic bank. So I think to be able to go to the psyche of the person at the grassroots level through a branch network, well, that I think is something that is going to be a bit of a challenge for them. So they might have a lot cut out for them to show that they are really, in as much as they've been serving high net worth individuals and institutional customers, they can also go down and serve the small person at the ground level. So I see that as a major challenge.
Now looking at the macro picture, we have inflation expected to decrease in March. Are you also of the camp that it will decrease going forward?
I think looking at the various factors at play, we expect a slight drop in inflation this month. I think the numbers should be coming out any time now, and that might probably set the pace for next week's monetary policy meeting on on Wednesday, I think. And I think if we see a drop in inflation, and I think 2 months might actually count for sustainability in terms of going forward, we might just see some easing taking place. And like we were talking earlier about the stock market trading, equities trading sideways, we see the environment of high interest rates and high inflation constraining a sustained recovery in share prices. And we think until we see inflation and short-term interest rates going below double-digit rates, we don't expect the equities market to recover. So I think by and large, the recovery of the equities market hinges a lot on the stability of the macro setting, and more so regarding the liquidity position easing and a more accommodative monetary policy.